Joining me for a look at what's playing out on the market scene at midday is Andrew Padoa from Sasfin Wealth. Andrew, thanks so much for your time this afternoon. So overnight, we saw U.S. markets somewhat plunging following the downbeat consumer confidence print. And just reflecting on some of the print we've seen so far, we saw the retail sales print also downbeat, inflation on that front accelerating. Is this a cause of concern? Because there have been now, fears around slowing growth in the US.
Thanks for having me in, Taoleng. I think, slowing growth is not good for markets, but I also think US markets, there was a lot of expectations priced into markets, especially in the large cap space in the US in the tech sector. Their valuations are definitely on the high side compared to history. So it's a matter of slowing growth in an environment where PE multiples are quite high already. So I think markets are going to be quite choppy. What we saw from a returns perspective in the US last year and the year before, certainly don't think we're going to see that in 2025. So I think investors need to moderate their expectations for returns. I don't think markets are going to collapse in a heap, but I don't think you're going to see double-digit returns from US stock markets this year. We're going to have a lot of volatility as well. And
talking about those large cap stocks, NVIDIA out with results later today. What are your expectations on that front? I mean, when we look at some of NVIDIA's past earnings reports, they seem to be doing good, but it seems like market expectations are even higher. This time around, we have DeepSeek also emerging. So generally, what are your expectations for those numbers?
I think it was quite telling to see the big tech companies in the US ramping up their capex in the latest set of results over the last few weeks. And that is even with all the DeepSeek drama that we've seen. So that bodes well, in my opinion, for NVIDIA, the fact that these guys are ramping up capex and not reducing capex. So I'm expecting good results from NVIDIA, but like you said, are they good enough compared to the expectations? They've got very, very high expectations to hit. So I think it's unlikely that you'll see NVIDIA rally to $170 a share after the results. I think if anything, there's probably a risk to the downside in NVIDIA's results. You've kind of almost got to review your investment thesis for NVIDIA every 6 months. I don't know if you would be a five-year investor in NVIDIA at the moment, because things can change quite quickly in that space.
Let's bring it back home. We got the local inflation print. Consumer prices coming in slightly higher, accelerating to 3.2% from 3% in December. Nothing to worry about, right? Considering that we are still at the lower end of the Reserve Bank's target range.
Correct. I think I'm very grateful we're at the low end of that range, especially with Trump coming in now, and that just brings a whole level of uncertainty to inflation. Also, with all the tariffs that he wants to implement, is that going to be inflationary or not? We don't know. It's too early to tell. So inflation going from 3 to 3.2%. Look, that's going in the wrong direction, but thankfully it's off a low base. I'm not sure what the MPC will have to think about this. With Trump in, interest rates starting to climb. I don't know if we're going to see too many interest rate cuts in South Africa in 2025.
All right, let's move over to some company news. AB InBev out with earnings. Those numbers topped market expectations. But the slowdown in China impacting the results in that market. Do you expect to see somewhat of a turnaround moving forward from that market, because we are seeing, those stimulus measures coming through and boosting the economy, even though, consumption is still quite tepid?
Yeah. Look, the market seems to like the Anheuser-Busch results. They're up handsomely today. If we look at the alcohol companies over the last 18 months to 2 years, they've been under quite a lot of pressure. If we look at a company like Diageo, their sales, look, the share price has been under massive pressure, but their sales have been falling since 2023. So it's at least nice to see Anheuser-Busch have some revenue growth compared to some of their peers. However, beer volumes were down. So, how did they manage to grow despite having sold less beers? And it's their premiumization strategy. They're trying to sell fancier beers at higher prices to offset, lower beer consumption. So that strategy seems to kind of be working. Market really likes that results. And that extra cash can be used to accelerate, paying off debt which has been an issue for Anheuser-Busch over the last couple of years.
Bidcorp, also an interesting one. It's really been powering through over the last few years, but we are seeing growth slowing. So we are seeing growth, but it is slowing. Is that why it's been punished today? I see it's down 2.5%.
Yeah. So revenue is up 3.6%, which I don't think is fantastic given where the PE multiple is. Look, there were some currency headwinds, so we've got to factor that into account. That certainly didn't help them. So I think the revenue growth was a bit lower than what we would have hoped for. Bidcorp is still a fantastic business, and there were some positives. So one that got my attention was the 30% increase in trading profit in the UK.
Yes.
That's fantastic. What I do like about Bidcorp is they've got a very strong balance sheet. It helps them when times are tough to survive. And it also gives them the ability to be agile and to do M&A acquisitions where they see appropriate. So results a little bit on the softer side, but it's still a company I really like.
And then AECI's new strategy seems to be weighing on earnings, Andrew. It's had to account for additional costs like transformation project costs as well as impairments, and this resulting in lower earnings. I think they were down about 37%. What are your views on those numbers?
So we had a trading statement from AECI a few days ago or a few weeks ago, so we knew the results were going to be bad. I think we were just looking for more color on the turnaround strategy. Market seems to like what they heard today. But I think from my experience, turnarounds are hard, and I wish them all the best in trying to do it. But if you look at overseas companies like Nike, you look at Starbucks, you look at Intel, they had 3 very competent CEOs running those companies. All 3 of them fired last year because they couldn't execute their turnaround strategy. So, yeah, my takeaway is turnarounds are hard. Let's see how it plays out. We also saw their CFO resigned at the end of last year on mutual grounds. So I don't know what's going on there. I'm happy to stay on the fence on that one and not invest.
Want to watch closely, I guess, as that turnaround strategy is underway. Let's just hit pause on the conversation before we get to your stock pick. Let's reflect on some counters that have found favor with your industry peers.
Yes, so Bidcorp reports tomorrow, and it's one of those easy to ignore stocks. It's a big stock. It's only listed here in South Africa, but it only has about 5% of its earnings from South Africa. It's a global business, deals in the world of the shift from cooking at home to eating out. And because a large component of its business is in the developed world, it's done really well. They tend to have a pretty lazy balance sheet, which allows them to make acquisitions. They're very operationally driven, improving their businesses from the bottom up. So their margin expansion is not so cyclical. It's actually structural as they add more and more products in the countries. And in the countries they're in, they typically tend to be top 1, 2, or 3 player in a minimal player market. So I think at current levels, it looks like it offers value. It's not expensive at all. And like I said, it's easy to ignore it because it never has these violent swings about its share price or its earnings.
I'm picking a company listed on the JSE, AVI. So they do a little bit of fashion and clothing and footwear, but predominantly food. So if you like your coffee or your tea or your biscuits, or your snacks, your potato chips, AVI is a purveyor of these. It's not quite a monopoly, but it does have large market shares in the specific food products that it manufactures and sells. Like so many SA Inc. shares, it did tremendously well between early last year and late 2024 after the election, and it's down quite significantly then. And I think that creates an opportunity because the company keeps on delivering solid financials, very good management team, very good history of capital allocation. They pay out special dividends whenever they have excess cash. So with a good management team at the helm, I don't think necessarily the business is worth so much less than the share price has fallen by over the last 3 months. A high quality company on the JSE, especially in a market globally where shares are expensive. I think it's a decent time to look for some opportunities on the JSE like AVI.
So we just spoke about Bidcorp, and you and Ray seem to share the same sentiments around the strong balance sheet and how that's been able to cushion Bidcorp in tough times. Let's get your views then on AVI.
Sure. So, like I agreed with Roy on Bidcorp, I agree with JP on AVI. AVI is probably one of the best management teams on the JSE. They've got a great history of capital allocation, and they've had quite a re-rating over the last couple of months, like JP mentioned. And they're on a forward PE of under 13 times, which I think historically AVI has been growing their sales probably 3, 4, 5%. So that valuation is undemanding. If we look at Walmart, for example, they're growing sales at 5%, but they're on a 38 PE. So we're not comparing apples for apples, but I think AVI looks attractive at current valuations.
All right, then let's get your stock pick before I let you go.
Sure. So my stock pick today is Novo Nordisk, the Danish pharmaceutical company. They've also re-rated quite a bit over the last few months. They were on a forward PE of probably 35 or more. And they're now on a forward PE of 23 times. So it's re-rated a lot. The business is growing at 20% and expected to grow around 20% over the next 12 months. We're still very bullish on the GLP-1 drugs. And expectations have moderated a lot. So we see a high probability of double-digit expected returns from Novo from here.
All right. Andrew, thanks so much for joining us and sharing your insights on the day's markets action at midday. That was Andrew Padoa from Sasfin Wealth.